Australian dwelling values continued to rise in June 2024, with a 0.7% increase, bringing the total growth for the 2023-24 financial year to 8%. This translates to a $59,000 rise in the median value, highlighting the housing market's resilience despite high interest rates, rising living costs, and tight credit conditions. This 8% growth marks a strong recovery from the previous year's 2% decline, with consistent monthly gains of 0.5% to 0.8% since February. Brisbane has emerged as a standout performer, with dwelling values rising by 1.2% in June alone, and an annual growth of 15.8%. Interestingly, Brisbane's unit market outpaced the housing sector, with unit values increasing by 10.3% in the first half of the year compared to a 6.5% rise in house values. Despite this strong growth, Brisbane remains more affordable than Sydney and Melbourne, continuing to attract interstate migrants and investors due to its combination of affordability, strong capital growth, and solid rental yields. Nationally, the rental market is showing signs of cooling, with the annual rent growth rate in Brisbane declining from 9.4% to 8%. However, house rent slightly bucked this trend, with growth ticking up from 7.7% to 7.8%. Other markets across Australia showed varied performances, with Perth leading at 23.9% annual growth, while Melbourne and regional Victoria saw slight declines. Economic indicators. The latest employment data from the Australian Bureau of Statistics shows the unemployment rate at 4.0% in May 2024, offering insights into the property market's future trajectory. A relatively tight labour market, though less pronounced than in late 2022 and early 2023, suggests potential wage growth as employers compete for talent. This could enhance housing affordability for some, driving property demand. However, the slight increase in unemployment and moderation in labour market tightness suggest a cautious outlook. Looking ahead, while risks to the housing sector are growing, values are expected to continue rising in strong markets like Brisbane. Key factors to watch include rising financial hardship, increasing mortgage arrears, currently at 1.6% nationally, ongoing housing undersupply, construction sector challenges, and potential policy shifts impacting housing demand or supply.